I thought that things are crazy, but quite frankly, what I just saw, I think things are probably 2 or 3 times as crazy as I thought. So one of the gyms I go to in the morning is full of private bankers. You might call them investment advisors. And I just heard 2 of them talk about how Bitcoin dropped, I think something like 10% over the past, couple of weeks, and that they received client calls over the weekend about clients panicking. If you think about this, what's happening both from the client's perspective and from the investment advisor perspective is completely insane. Here's why. Okay, now in order to understand why these private bankers would be panicking about a 10% drop in the price of Bitcoin, it's important to understand what they are doing. What these guys are doing, typically for the higher net worth cohort, but it's also happening for really anyone that has an investment advisor, is they're creating something called a structured product. What's a structured product? Is they're essentially packaging, in this case, let's say Bitcoin, into a product where the investor, the end investor, the client will make money as long as Bitcoin remains above a certain point. If it breaks below a certain point, the client might have to either buy Bitcoin or not receive some sort of a payment. The crazy thing about this, after listening to these guys passively while getting dressed, is that the strike points on Bitcoin was 10% below the price. So something like somewhere between 100,000 and 110,000, which is crazy because Bitcoin remains a pretty volatile asset, has evolved around 40 or so-ish. So the fact that they're not giving it any playroom, a 10% drop is completely irrelevant. And so it tells me how overconfident everyone is about the prospects of these assets continuing to go up linearly and not respecting, any sort of volatility at all. So I think that's a problem, and I wish those guys the best. They sounded extremely overconfident still, but I'm going to keep you guys updated on this because this could get interesting. I should also mention these structured products that these private bankers are doing, they're not just doing this on Bitcoin, they're doing this in anything and everything, a lot of Max 7 stocks. So that same problem that they're having with Bitcoin, where they're not giving enough breathing room, is most likely maybe even 10 times worse, or just coming up with a number in individual stocks. So this will be interesting.